Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Tessa Price, who's the CEO of UDC Finance. Thanks for joining us, Tessa.
You're welcome.
Look, you've come out with another strong annual result. I'm curious just to see, based on how UDC is performing and how your lending growth is growing and where it's going to, what do you think this tells us about where the overall New Zealand economy is at the moment?
I think it's a really good signal and message. We have seen growth across all our core segments, so whether you look at car finance, transport and storage, forestry, construction, they're all up significantly. So I think we really are a gauge for economic performance. We've been hearing it for a while, and now really we're hitting the road.
So UDC can be seen as something of a bellwether for the New Zealand economy.
Absolutely, and if you look at the latest truckometer from the ANZ and the privately owned business barometer, they're all saying the same message along with the economic data.
Okay, so your annual profit was up 13% this year. What was the key driver or key drivers?
We had a significant cost in our funds, which was very helpful, a 7% increase in our new lending as well, and we maintained our margins whilst keeping our costs flat, so all were drivers.
I noticed that there was about a 7% fall in your interest expense. So that's, I guess, largely on the deposits and debenture rates that you're paying?
Yes, that's correct.
Those rates have come down, obviously, across the board, not just at UDC this year. What's your outlook on that front?
Pretty positive, actually, at the moment. For the next sort of 12 months, we see those funds continue to fall.
In terms of the rate?
Yes.
So you'd expect that the debenture rates will drop further from here?
Drop further for at least the next 6 to 12 months.
Okay, what's the main driver behind that?
Well, there's lots of money in the market at the moment, so people are finding places for their deposits.
And UDC's also got a loan from or a funding facility from ANZ of up to 800 million. I think September 30 you had about 320 million drawn down.
Yes, that's correct.
How do you determine where and when you use that?
Really is through our lending. So when we're growing, we actually draw down on that, and we look to the market for funds as well. So it really is a combination of growth in the market, what we've got in terms of our deposits, and whether we need to access those funds to support that growth.
Now, UDC is owned by ANZ, but you've got other banks out there that are competing with you. I guess among the big banks in particular, BNZ, ASB, Westpac, we're hearing they have been quite active in recent times in some of the traditional finance company markets. What sort of competition are you seeing from those banks and indeed from other finance companies at the moment?
It's a very active and competitive market at the moment, which really is a good, healthy category. We've also got some new players coming in from the Australian market.
Oh, okay. Who in particular is
the likes of Nissan Finance are coming into the car market, so it's a good, competitive, healthy market.
So, of those banks in particular, have they been getting into any new areas in recent months that you haven't seen them in for some time?
Yeah, look, absolutely. BNZ has entered into the car market and doing things quite differently.
Okay. What in particular?
Setting up car finance through car dealerships.
Okay. So that market it's obviously been very strong, but it's quite competitive at the moment too.
It is a very competitive market, and you've got to set up a lot of infrastructure around it to make sure you can service and give customers decisions on the spot, so they can drive out of the car yard with their finance and their car. So that's critical. And
you mentioned in your release today that October was the strongest month for new lending, I think, that UDC's ever had.
Since 2000.
Since 2000. What were the key drivers in October, and what's your sort of outlook going forward?
Across the board, and we've just completed November, and it's continued on. So we now have record $100 million months, which just again shows the economy is improving. So when we grow, it means New Zealand's growing.
So October and November both topped 100 million?
Yes, easily.
And any particular areas, or did it continue on from...
Across all segments, which is really pleasing.
Okay. And your outlook for next year then, what's that like?
Incredibly positive.
Okay. Driven by?
Whether we look at agriculture and forestry, or we look at the transport segment, that's doing very well, along with car finance and construction. They're all very active, healthy, so there's reinvestment, there's roads that are being built and bridges, and obviously the ag market's doing well off the back of the dairy payouts. So all segments are doing well, and business and consumer confidence is up.
But any particular clouds on the horizon?
No, none that I can see at the moment. I think people learned a lot out of the GFC and have been very sensible and have built up capital, and now are reinvesting because they can see the growth, so they've been quite conservative in their approach.
So there's the risky lending aspect is not there to the extent that it has been?
No, completely gone.
Okay. And what about the Christchurch factor? Is that playing a big role in your construction?
There's some work coming out of Christchurch, and we've seen some growth there as well, but it's still, I think, gradual growth in Christchurch.
And what about, I guess, there's obviously a big drive on in Auckland to build more houses. Now, obviously you guys aren't lending mortgages, but is that side of things going to be a boost to you in terms of more house construction?
We should see some flow into our contractors, but no, we're not seeing anything in that market at this stage.
So in terms of your customers, are you seeing them do any sort of new or innovative things?
There's some great innovation out there. Patcho Industries have just done robotics, so they're quite innovative when it comes to haulers and log builders, so they're doing some interesting things there. We've also seen hybrids come in the way of cats and bulldozers, just like you'd see a car coming out there. And a lot in terms of forestry and mechanisation and really improving the safety of that industry as well.
Now that's obviously been one that's been in the news a lot, that industry.
It absolutely has, and I know the industry forum, which was just last week, is doing a lot of work around that to make it a safe industry for people to be in. As you know, steep slope haulage is a big part of what New Zealand does because of our landscape, and mechanisation will really improve safety standards.
Well, thanks a lot for your time, Tessa. That's Tessa Price, who's the CEO of UDC Finance, and I'm Gareth Vaughan at interest.co.nz.